Alright, hey guys, it's Brian, once again from The Boring Husband. Okay, so as we all know, it's been a very hot week. Okay, we have stocks like Nvidia running, and I think as of yesterday, stocks like Nvidia is still running with C3 AI up like 30%, Nvidia up another 3-4%, hitting that, I don't know, they're calling it a $1 trillion market cap kind of nonsense. Okay, at the same time, your any AI related stock is holding up really well. So you got your Palantir, Microsoft, Trade Desk. These guys are all running pretty well. Okay, now amidst this crazy AI market, there's one stock, or rather, well, not say one stock, one category of stocks that has been left behind. Okay, and these are our so-called China stocks. Okay, so like your Alibaba, with the exception of PDD that spiked about 20%. Okay, but Alibaba's going down, and well, believe it or not, okay, people put C Limited together with China stocks. Okay, so it's kind of like in the same basket, and we have C Limited, closing below its 200-day average, 200 moving day average, and as of yesterday, or rather as of 3 days ago, C Limited once again also broke below its 50-day moving average. So this implies that the stock is going to move even lower, okay, possibly to test the lower levels of 40 plus. Okay, but before we go into that, I just want to share that for C Limited, as per the topic of today, okay, we're going to explore 3 reasons, okay, why I'm still bullish on C Limited, and why I kind of accumulated on this dip, and which levels I am looking at as the dip goes further. Okay, now C Limited is a very interesting company. Okay, as we all know, 1 quarter ago, fourth quarter 2022, they reported their first quarter achieve earnings, achieve profit. Okay, and it was very good, and it caused that stock to kind of rally on that day. Okay, but come this quarter, so 1Q 2023, that net profit, okay, it's close to almost zero. Okay, they still achieve a profitable quarter, but it was like really barely. Okay, it was like really what they call a one-ply profit margin. So this kind of got investors a little bit spooked out. Okay, I'll go a bit more to cover on that, but if I could sum up just 3 points, okay, why I invested, or rather why I doubled down on C Limited. Number 1 is nimble management, number 2 is improving fundamentals, and number 3 is what I call favorable risk to reward in terms of the technicals. Okay, so number 1, okay, nimble management. Okay, so I think that C Limited, okay, management is very adaptable. Okay, meaning to say that like when shit hits the fans, okay, management knows how to react. They faster fire people. Bearing in mind, okay, sorry, fire is not the right word. Okay, retrench. Okay, so bearing in mind that C Limited was one of the first few companies that kicked off this entire so-called tech layoff. Okay, they are one of the first. Okay, they didn't follow, they didn't wait, they started it first. Okay, and at the same time, we can see that when they pivoted, our interest rates, blah blah, they were able to kind of cut costs on almost every single segment, and hence achieve that much needed profitable quarter. Okay, now there's 2 things about management. Number 1, top management can say something, middle management can heck care. Okay, but in this case, I think that the whole company is very aligned. Okay, and this very difficult to find in a big company. Bloody hell, I work in small SMEs, right? Boss says something already, the person next door, which is like the middle manager, already don't care already. Talk about a company like this where you have a few hundred employees, 300,000, and then Lee says something and then everybody else comply. So, I mean, of course, whether he threatened them or whatever, okay, don't really care. But the point is that what management says actually actualizes, okay, into reality, and as we can see, into the balance sheet. So this gives me confidence, okay, as an investor, that if the next major thing were to hit C Limited, that they too indeed will be able to, well, at the very least, do something about it and react to the changing environment rather than wait for like the changing environment to screw them over. Okay, if you look at stocks like, okay, of course not trying to discredit any company, okay, but if you look at stocks like Intel, goodness, I got no idea what they're doing. Correct, like all you see is Nvidia and AMD going head over heels, but what exactly are they doing to capture back market share? I got no clue at all. Okay, so at the very least, C Limited does give me confidence. Okay, and as I said over here, any decision from Lee, okay, has translated to actionables which have been executed swiftly by the team. Okay, so kudos to the team. Okay, now second one, improving fundamentals. Okay, now this is very tricky. Okay, if you're going to measure fundamentals by their if you're going to measure fundamentals by their overall net incomes, then you will say that their fundamentals are screwed over. Okay, but in my opinion, okay, when I look at improving fundamentals, I want to make sure that your, at the very least, your revenue is of course increasing, you know, to some extent. Okay, and we want to see all segments or most of the segments growing, and we want to see, as time goes by, hopefully, that this net income that they have doesn't shrink any further. Okay, so 3 parts to this. In terms of fundamentals, for this recent report, okay, the big problem, okay, that I suspect okay, why investors sold off, okay, is because C Limited got 3 business segments, very easy to understand. Okay, one is your Shopee app, okay, which they call e-commerce. One is your Garena, okay, so your, I don't know, all the mobile game and stuff like that. And then they have your C Money, okay, so like just call it digital finance okay. So of these 3 segments, e-commerce, okay, takes up about 2/3 okay, just for ease of this video, takes up about 2/3 of their entire revenue, okay, and then yeah, correct, 1/3 is divided by Garena and the games and the financial thing. Okay, so the problem is that e-commerce grew, okay, from 1.5 billion to 2.1 billion in revenue. Okay, that's very good. Okay, digital financial services also grew, okay, by about double. But the problem here was that Garena fell. Okay, so when we look at these numbers here, from 950 million in Q4, okay, to about 540 million in Q1 this year. So that's about easily like a 40% of revenue gone from this Garena. Okay, so it's a bit tricky, okay, because half of the 1/3, okay, which is, I don't know, 1/5 whatever, okay, of their revenue from Garena, okay, cut okay, by half, and because of that, investors are kind of spooked about it. Okay, now in my opinion, I'm not really concerned. Okay, at the end of the day, 2/3 of their revenue comes from e-commerce. Okay, hence, as long as their main source of income, e-commerce, okay, does not fluctuate, okay, or does not, I would say, like, okay, to be honest, at the next report, right, okay, like this 2.1 million in get revenue for e-commerce suddenly become 2.1 billion becomes 1 billion instead. Hey guys, I thought, if you just sell C Limited, don't waste time. Okay, it's over. Okay, but in this case, it's not over. Okay, their main source of income, e-commerce, is actually growing from 1.5 billion to 2.1 billion. So if you think that places like TikTok Shop, like, I don't know what else is coming up. I don't know to me it's just TikTok Shop that is the biggest one. Okay, it's coming up and coming. Then you know, they're not, or rather they're not capturing, I guess, the market as efficiently as we thought, because, you know, Shopee is still reining in the cash. Okay, so when we look at, okay, overall, one of the problems, okay, that I see, even though I would consider their fundamentals still improving, okay, because at the end of the day, net income is still present, even though net income has shrunk by a lot. Okay, so just to let you all know, okay, previous quarter net income was 422 million. This time round, net income was only 87 million. So that's like 25% of their last quarter's net income. Okay, I'm not going to go into the details why. Okay, but this net income needs to keep up. Okay, if this net income goes any lower, okay, in the next quarter, okay, then guys, that is a huge red flag. Okay, I myself, ISO will trim already. Okay, if it's over, it's over. Don't think that it will come back. Okay, but if not, I consider this a dip. I kind of load it up a little bit. Okay, but take note that there's one problem, okay, in terms of these fundamentals that you want to look forward to. Okay, and one of it is what I call their revenue year on year. Okay, so they put over here, okay, that okay, I see where I read again very closely. Okay, 2.1 billion in GAAP revenue for this quarter 1 2023, compared to quarter 1 2022. Okay, so they are comparing this quarter to last year's quarter. They're not comparing to the quarter before this. Okay, now if I kind of tear apart their earnings and I tell you the damn truth, okay, the truth is that if you compare this first quarter revenue with last quarter 4Q revenue, okay, their revenue actually decreased by 12% quarter on quarter. Now, these are the little things that, you know, all these people that prepare these beautiful slides don't tell you. Okay, so they say like, wow, my revenue increased like, wow, compared to last year's, you know, this time last year. But hey, last quarter only, you just look next door only, the revenue actually decreased by 12%. What nonsense, but they don't tell you this kind of stuff, only I do. Okay, so keep a lookout for these things. if revenue, of course, they will argue that fourth quarter revenue is always better because there's Christmas, blah blah, people in a festive spending mood. Okay, that's fair enough. I buy that. Okay, but next quarter, okay, we want to make sure that revenue continues to increase at least marginally. Okay, if it goes down, then once again, story is over. Okay, now we go to the last point. Favorable risk to reward in terms of technicals. Okay, now for this, I'm going to share my screen. The blue line is the 50-day moving average. Correct? Yes. Okay, and then the green line is the 200-day. Okay, so we can see, okay, from this chart that they broke below. So at one point in time, 2023, early 2023, and also in April, the 50-day moving average proved as a, what is that word, dynamic support level. Okay, and then of course we can see that it broke. So now what I like about the stock is that, okay, what I used to like, okay, is that I thought that it would rebound when it hit the 200-day moving average, but now it has actually broken below, okay, the 200-day moving average. So this is very tricky because when a stock breaks below the 200-day moving average, it implies that there is further downside, but at the same time, it also can imply that the stock is trading below what you call I guess its value lah, okay, to some sense lah. Hence, you would expect some kind of retracement back up above the 200-day moving average. But what's interesting to note, okay, is that this area of $60, okay, let me just draw a line here, yellow line, okay, so this area of $60 does seem to be, I would say at least not a very strong support level, but at least an interim one, okay, hence that might be an area where not that you want to load up a lot, but at least, you know, it's if you've been waiting for a dip, this is it lah. Okay, correct, it's reasonable to say this is a dip. Okay, if you really want like a rock solid support level, and if it really gets there, then that will be clearly this one over here. Okay, so that's about 43, 45. Okay, so you'll notice that once again, with support levels, okay, we draw lines and we try and find patterns in the chart, but at the end of the day, it's always very, very psychological. Like stocks like to, like, you know, they like to trade at like 100, you know, 200, 1, okay, so things like that, okay. So likewise, you can see here, we are seeing some, you know, we see support at like 40, 45, okay, so it's a little range between like that, and we're also seeing some, or rather some support at this 58, you know, 55 to 60 kind of level. Okay, so that's why I think in terms of charts, of course, the stock has retraced, you know, from 90. So you see over here, once again, 87 to 90, that's a place where people take profits from. So, you know, if you're looking to take profit, that's a pretty good area as well. If we go a little bit more into this, okay, I'm just going to pull out the RSI. Give me a moment. I think it's this FX button. Yep, RSI. Okay, so relative strength index, okay? So the RSI is not an indication of whether the stock will go up or down. Trust me, no indication will ever tell you that. Okay, but at the very least, it tells us as traders when a stock is overbought and when it's oversold. Okay, so basically overbought means the stock is like damn hot. Oversold also means it's very hot, but people are selling it instead of buying, okay? So currently, okay, as of market close yesterday, our RSI hit 26. So this is considered like very, 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 very oversold. Okay, it means that there is a greater likelihood, okay, of the stock rebounding up than when it's overbought. But then again, overbought stock also can fly through the roof lah. Okay, but anyway, okay, it basically just means that it's a good time to buy the dip. Okay, we can see that the last time it hit this very, very low levels of 25.37. That was probably like when it was like here. Yep. So that was like, wow, all the way, yeah, this time last year, essentially. Wow, what a coincidence. Okay, so overall, I think that the stock has retraced from 90 to 60, so that's about 30% off. It's trading at a so-called a very kind of marginal support level, like a, not say very strong one, but just kind of medium support level, kind of thing of $60. Well, I've been waiting to so-called buy this dip, so I bought a little bit. Okay, but of course, breaking below 200-day moving average implies that it can move even lower. Okay, so that is my TA on this. Okay, just to wrap off once again, okay, in terms of where we are at with C Limited, okay, so I think the last quarter's net income, the 422, whatever, it was a little bit too good. Okay, well, it was really very, very good. Okay, so most people feel that, you know, it's just a shot in the arm, okay, and I don't deny that, given that this quarter's net income was like only a quarter of that, okay, so it's very interesting for us to see, you know, whether the next quarter are we going to see this net income increase or decrease. Okay, if it widens, if it increases, that's a very good thing. Okay, that means by all means get more. But if not, then I think that would require us to all maybe cut our losses a little, be a little bit more nimble with these things. What I do think, okay, is that currently C Limited, if you say that the stock is cheap, okay, by looking at the price 1690, you can't say it's cheap. Okay, that's complete crap. Okay, but as we know, this kind of so-called, I guess, loss-making companies in general, one of the easiest ways to measure them is the PS ratio. Okay, so if we look at the PS ratio of C, okay, they currently sit at 2.7 lah. Okay, this to me is actually not too bad. Okay, 2.7. Of course, if we look at like other companies, I don't know. If you let me just search Tesla PS ratio. You'll probably see it like what Tesla PS ratio is like 7.38. So I mean, something like that lah. Okay, so of course on its own, PS ratio doesn't tell you anything. Okay, but if you compare it, then you kind of see where valuations are at the very least lah. Okay, for companies. Okay, but by and large, this is not an area for us to go like all in on C Limited. Please don't do that. Never do that for any stock. Okay, but at the very least, if you are looking for like an area to kind of or rather a point to kind of buy the dip a little bit, like you're feeling a little bit, I would say like unsettled, you want to like buy something, like impulsive lah in general, then I think this is like pretty okay lah. I mean, at least that's what I've been doing. Okay, but if not, that's it for me for today. Okay, I'm gonna be releasing a surprise video. Okay, next few days ahead about my trades. This bull market. Okay, this very recent bull market. Okay, stocks are getting very hot. So please do feel free to subscribe and wait for the next video. Okay, thanks guys. Bye.